Hello traders, and welcome back to a weekly US indices update video where we're going to be taking a look at some of the biggest US indices. Of course, the Dow, the US30, Nasdaq 100. We're going to be taking the SPX500 and perhaps some other indices as well. Stay tuned, stick around to find out. Let's start with a daily chart analysis of the US30, which has seemingly found a pretty solid bottom ever since the October lows that we saw just the end of last year. You can see that we are off those lows, and looking at the daily chart, we've had a nice consistent flow to the upside for now. Now, I want to show you guys something here that is kind of interesting. So we've had a really nice run, and in fact, it's probably been a bigger run than most traders and investors out there were expecting. Because as we scroll out to the daily chart and we draw some longer term trend lines to the downside, this came as a surprise that we not only have broken through that downward structure to the upside, but we've actually retested and found buyers off of this low and put in higher lows since then. So there's a daily chart analysis, and when we zoom in a little bit to more recent price action, what we can see is that buyers have been pretty stubbornly holding the lows recently. And again, analysis would show us that drawing our daily chart levels, we've put in a low here around 32,750 on the US30 and consistently finding a push off of these levels. For me, this looks bullish until proven otherwise. Again, there are a lot of people out there who are very bearish on stocks. The popular crowd is very much interested in shorting the stock market right now, which we'll get into in just a bit. But my thought process here with the Dow is that we have a problem. We have a big level of resistance that we've been struggling to get above. And you can see where I'm going with this likely. You had this big wick and some resistance points looking left where sellers kind of came in and smashed this thing down. And I want to bring something to your attention as we go into this week. It is very possible that we are going to be seeing this run up occur right ahead of a big Federal Reserve meeting. And if you've been trading the Dow, if you've been trading US30, then you know that very often has been the case. We've seen these strong run ups just to get smacked down into a big Fed meeting. That's going to be, of course, an interesting contention point for this week. But for now, price looks bullish. It looks like it wants to continue up to retest these highs at 34,300, which is where I think we will probably see price extend to. Now, whether or not it declines from there is up in the air, but I think that there's a solid chance we see this bull run continue to make a push up to, at the very least, this level of resistance looking left on the chart. And if we tighten that up, again, it's the key resistance point looking left here where we recently found a lot of sell pressure. Now, the Dow, compared to the Nasdaq and the S&P, has actually been the biggest lagger, or the one falling the most behind to the other two main indices, which is interesting, of course, as we see this thing continuously putting in higher lows, still looking strong, but not nearly as strong as perhaps its counterparts, the Nasdaq and the S&P. Now, I want to talk a little bit as we zoom in here. We're now looking at the 4-hour chart. If we think that price is still going to make a move up into these highs, then where could we be looking? Well, on the shorter time frames for the day traders, for the swing traders out there, I'm watching levels like this pullback here to the 50% retracement. What I've just done here is I drew a low to high move here on the fibs using our three levels here. You can see we've got a 38.2, 50%, and 61.8% retracement. Nothing magical here, but looking left, we can see that there was a key level of structure that held very well for the bears and then broke out and caused a bit of a bull run there. So if price were to retreat back into that area, I would expect from just a technical analysis standpoint to get some sort of a bounce and perhaps a continuation on up into that ultimate target that we had mentioned, the previous high at 34,300. To see that come into play next week would be, of course, interesting, and I think a very good possibility. Now, like I said, I am bullish on the indices, although I think that once you start poking up into these resistance points, you have to be very cautious. Maybe look to trail stops if you trade in a similar manner to myself, or perhaps take profits, take partials, whatever you like to do, however you like to handle the markets. But for me, like I said, I think as you start poking up into those areas, you got to be very cautious, especially ahead of a big Fed meeting, that we don't get caught in something. One more thing I'll show you with this on the technical analysis standpoint, you'll see I just drew my fibs from the low to the high here, and from the low to the high here. So we had two different fibs, both of them giving us confluence in this area, which is why I'm so distinctly paying attention to the technical setups here at 33,700, give or take, at that 38 0.2% retracement on this extension. And again, this other shorter time frame one giving us that 50% confirmation. When we overlap those two, all we're doing there is combining more technical factors in our favor. Again, nothing magical here, very simple technical analysis, just looking for the pullback in an overall upward trend. So there's the US30 in a bit of detail there. Now let's talk about the more interesting ones in the terms of strength. We have the Nasdaq 100, which is much healthier of a looking chart. Tech stocks exploded this week, and we saw a lot of great earnings. And one notable figure here causing some of the Nasdaq rise, no doubt, is Tesla, which Tesla absolutely parabolic run here this past week. You can see here's a daily chart, and you can see gap ups and just massive run here. This looks like, one of the more aggressive bear market rallies that I've seen across the stock market throughout all this period of time. However, you got to give this thing credit. This thing was in a complete downward trend, just spiraling lower and lower. And with this key break, now just looking a lot of green there, piling up and showing potentially some continuation moves here overall. So I think that Tesla looks strong, although yes, a bit extended, perhaps pullback could be of interest. Now, of course, we're not necessarily stock traders here per se on the channel, but it can have impacts on the indices, whereas I know a lot of you guys pay attention to the indices like myself. So here's the thing about the Nasdaq. Nasdaq sitting at resistance to close out the week on Friday, and definitely looks a bit extended, I will admit. Despite that, though, I am still bullish, and here's why. Stock earnings came out very strong. Inflation is on the decline. Things look not necessarily like recession is not going to be here. There's still lots of problems, don't get me wrong, but the market has been thinking there's going to be recession in the end of the world for months, and for really the better half of a year and a half. The market is terrified, has been terrified, and so now we're finally getting some optimism, and that's just the beginning, I think, of a potential continuation of this upward trend. Now, is that going to last 6 months, a year, and just go back to the highs? Well, we'll have to see. I don't necessarily think that, but I don't try and forecast too far ahead in the future. I am a trend follower, meaning I am looking to go with the flow. So as we see this 4-hour chart just exploding to the upside, I'm not looking to fade this. I'm looking to get involved. I'm not looking to short it. I'm not looking to get in front of it. I'm trying to just ride the momentum with this trailing stop loss. And again, I don't know the future. I don't claim to predict the future. I am just using charts to try and follow trends as best I possibly can. I find that to be a much more relaxing way of trading, taking small positions, trailing stops, and letting winners run when they come your way. That to me is a much more relaxing, conservative way of trading. So I'm not, going crazy with this stuff. So as I pull up into this 12,200 mark here, you can see we've got it marked in green. Really, it should be marked in red. This is notably a level of resistance where I think you probably will see some level of reaction. You can see we spiked up into it towards the very end of market action this past week, and then found resistance here. This looks like a candle that shows there's a possible pullback coming. Now, is this pullback a full-blown reversal and continuation of a bigger downward move? Well, I don't necessarily think so. Perhaps it will, perhaps I'm wrong. And if I'm wrong, I could care less. I'm not about being right. I'm just about riding moves to the best of my ability. So how do I approach this? Well, pullbacks. If it does pull back, I'll give it a shot on the long side. And when I say give it a shot, what I mean is let's draw some fibs. Let's get some structure here. And I'll show you guys in just a moment the Edge Finder's view on this as well. Similar to US30, I actually like this chart even better at a 50% retracement, a pullback off of these highs, and looking for that trend that's going on to continue. Because here's the thing, this trend could continue to rock all the way back up to the highs. The second you try and make total sense out of the stock market is a tough day, because again, this stuff is not always perfectly predictable, and that's why I don't try to predict. I try and just react. So if price pulls back, I think a good possible bouncing point would be this 50% retracement. Market doesn't care what I think though, so I'll put a stop on the trade. So let's say I take a trade here and I buy this market. I need to know that if price breaks through the 61.8% retracement, if price fails to hold this mark, take me out of that market for a small loss in case this thing crashes lower. If it happens, hey, awesome, congrats to the bears. But for the bulls out here, for myself, I am looking to try and get involved at a reasonable pullback point. I'm looking to control my risk, And if this market rallies past the highs, which I think it has a possibility to do so as we are in upward momentum, I could look to trail stops and try and ride this thing the most I can. And again, if it goes all the way back to the highs, hey, that would be awesome for trend following, right? So we are at resistance. I recognize that. But despite that, again, some factors have changed on the fundamental sides. We see some strong momentum coming into the market. And for me, pullback plays look like like there's some good opportunity there. Now, I promised to show you guys a little bit of the edge finder. The indices showing up very high on my watch list here, and I'll show you guys this. So narrowing in, what we can see is that US30, Nasdaq 100, and German 30, which is the DAX, all get a buy rating on the edge finder right now. And just quickly looking across this, you can see COT data doesn't really help us too much in any of these particularly. However, seasonality does. So the month of January, historically speaking, tends to be positive for the stock market. Is that every year? No, just average. Last 10 years, we have that data. That's how we study that. Upward trend is pretty transparent in all of the indices. GDP growth favoring Germany, but not necessarily in the US for the stock market. Inflation data looking positive across all three. Why is that? Well, inflation data here in the US has been on the decline, and inflation declining is showing that, hey, the Federal Reserve might be getting what it wants, might be getting that inflation number to cool a bit. Maybe they won't raise rates nearly as harshly, and that could offer some optimism for the stock market. Unemployment numbers and interest rates still high, still negative on the stock market. But again, we're talking about a relief rally. We're talking about a relief rally, which doesn't necessarily mean it's going to last forever, but if it does, show those optimism signs, that can lead into a nice push to the upside that can last much longer than people will think it will. Again, people get so sold on stock market crashes because of the narrative, the story that gets spun all over the social medias and news headlines. Everybody is so convinced the stock market has to crash when things look tough. Despite that, time and time again throughout history, many times it has looked horrible, recession fears and all that sort of stuff. And the market rallies before the optimism starts to come back in. And so, that's kind of the scariness of the market is it's very oftentimes looking in the rear view mirror rather than looking out the front windshield. And yeah, just some analogies there. But Nasdaq 100, again, overall to the upside, 50% retracement. I'm looking to get long myself. I think that has some great opportunity for this upcoming week. We'll have to watch and see. Now, you'll notice the S&P 500 is not on this. I happen to know that it is, I believe it's a +2 right now. Yep, +2. So just shy of getting that buy rating. But if we go look at the S&P 500 anyways, just from a chart analysis standpoint, I would like to see if this thing pokes back into play this week, if we get a pullback. Here is your 1 hour chart. Some notable breakouts here towards the end of the week. A big run to the upside. And I actually traded this thing long last week and made some good money just riding that explosive move, trailing that stop, and then eventually was trailed out of my stop loss. Actually trailed out right here. So I didn't catch the whole of this move. I entered in right around here, rode that up, price pulled back, slapped me out of a trailing stop for a profit, and then of course carried on without me, which is going to happen sometimes. But despite that, we still have been making some good money on the long side. This was a trade that was shared within our Discord channel, and if you're not already inside of our Discord channel, I would encourage you to join. It's a great spot to learn, to get involved with other traders from around the world. You can see my trades. So if I'm long in the S&P 500, as you can see I was here, right? There was the initial entry, price rallied in my favor, and I was able to trail stops and make some money on this. So I share all of my trades as they're updated inside of the Discord with full breakdowns and analysis. If that's something you're interested in joining, then grab our sale right now that's going on. If you use code YTVIP, you're going to get a discount on our memberships within the Discord channel. And I hope to chat with you or see you inside of the group. And again, I would encourage you, if you're a new trader out there and you don't know what you're doing, you're like, I really could use some educational value and look over the shoulder of people who have been doing this for a number of years, then the Discord is perfect for you. Come join us, get involved in the action, and you can see the trades being taken by myself, Frank, and Ivan, our 3 traders at the company A1 Trading that I own. So That's the S&P 500. Explosive move here last week. And if price pulls back, I am still bullish on this thing, although I would like the Edge Finder to poke into a buy category for the S&P 500 as well. But we'll have to watch and see if that happens. Very similar, bullish on these things. If price can pull back into structure, ideally somewhere like 4,060, I'd be looking to try and just ride this thing. And again, yes, the move has already sort of happened and people would say, aren't you chasing here? Remember, trend following, as weird as it sounds, is about buying high and selling higher, right? Whereas selling low and closing back or buying back lower, right? If you're short, it's a weird concept and it takes some getting used to, but oftentimes when you get these explosive moves, the money is not necessarily trying to sell it high right here and the market keeps going. It's buying and looking for an opportunity to get involved and ride with the momentum. Now, I mentioned that I wanted to show you guys some sentiment on some of these things, and I want to pull something up for you. If we go over to the Nasdaq, and let's see if the Nasdaq is set up here. Nasdaq retail sentiment, we can go right here. You can see that the crowd is 55% short. Now hold that thought. Let's also go look at the S&P 500. The let's see, retail sentiment 58% short. Retail traders short on the S&P and the Nasdaq on average. Let's also go take a look at US30. The US30 has a 67% short. So retail traders are shorting the indices right now. They're against the flow of the river, if you will. So knowing that, again, retail traders very often trying to sell into this, whereas smart money may be looking to actually get long. In fact, I can't promise that either though, because COT data, actually have to take that back. Look at this. So retail traders and institutional traders are both short. Notably, though, the S&P 500 in terms of COT data, non-commercials are less so short than retail traders, at least according to the data that we have. Let's take a look at SPX500, see that, and again, very similar. In this case, institutional traders actually more short, but despite that, it's kind of a mixed sentiment here. So COT data, not necessarily on the long side, but we'll have to see what that how that develops over time. Regardless, COT data is not the only thing we pay attention to. It's one asset or one indicator that we pay attention to amongst many. So there is an updated view of the indices. If you enjoyed this video, make sure to hit the thumbs up button and subscribe. If you guys would like access to the Edge Finder, then you can get that access down below in the description. You can also apply for a free trial if that's something you're interested in, and we encourage you to try it out before you actually get it, as we want people to make sure it's a fit for them if they're going to get access to our data and use our software. Thank you guys for watching the video. I hope you have a great week ahead. We'll see you next time.